Unlike candlestick patterns that form with between one to maybe a few candles, a chart pattern is going to form with between 10 to maybe 50 candles. And what they are identifiable patterns that, like candlestick patterns, can give us an indication of possible reversals, can give us an indication of market sentiment, and can help us identify possible entries in the market. Chart patterns are by far my favorite way to enter trades. And luckily, even though there are hundreds of chart patterns, and feel free to go study as many of them as you would like to find the ones that fit your trading style best, I personally use one type of chart pattern more often than any others, and for the most part only utilize this one chart pattern in my own trading, and they are double bottoms and double tops. I said they're one, I know that's two, but they're essentially the same thing, just flipped upside down. So before we go through the way I utilize double bottoms and double tops in my trading, we need objective rules for this. The same way we had objective rules for candlestick patterns, we have to have objective rules for chart patterns as well. So these double tops and double bottoms are going to have objective rules, and that's what we're going to discuss right now, is the objective rules for these patterns. For a double bottom, that's what we're looking at right now here on the euro yen. For this pattern, what I'm looking for, and the way it looks on a chart, sorry I didn't do that before, the way it looks on a chart is a market that comes down, creates a level of support, then bounces up to a level of resistance. But instead of continuing down in this downtrend, we come down, we retest this level of support, and we're supported yet again. So much so that we push up enough to break and close above what is called the neckline. So this is bottom number one of a double bottom, bottom number two of a double bottom. This is referred to as the neckline, and that is the initial pullback from the first bottom that we need to break in order to classify this as an actual double bottom. So a way that most traders enter this is either by entering exactly as the market breaks that neckline, or one of my favorite ways to enter, and the way we're going to talk about and discuss entering today, is waiting for the market to break and close above that neckline and then getting a pullback into that neckline. The reason I trade double bottoms like this is because I can get smaller stops, therefore having a larger reward to risk ratio on these types of trades. So that is how we spot double bottoms. Let's go over how we spot double tops first, and then I'm going to talk about how I actually use these patterns to consistently make badass trades in my own trading. Let's check out a double top though. So a double top is going to be when the market pushes up to a level of resistance, then pushes down in our initial pullback, but instead of continuing this uptrend, we now test that level of resistance once more and find resistance yet again. The market then breaks through the neckline. So on a double top, we have top number one right here. We have top number two right here. And the support level that was created after top number one is known as our neckline. We need that neckline to break to validate that this is actually a double top. And the way I said we were going to be trading these today is by waiting on a pullback after that validation, after that break. We want to see a pullback into our level of support, and that's where we're going to be placing possible trades and looking for the continuation down. Now, before we get into how I use it, I know I said we were going to right after this, I want to talk about those objective rules. So the objective rules I have for a double bottom, let's actually start there, is I need to see the first bottom and the pullback. At the point that I see this first bottom and a pullback, what I do is place a box. My box is going to be, let me make this way more easy. Hold on. Here we go. Okay, so at this point, it doesn't look like a double bottom, right? But I need an objective rule for how I'm going to enter a double bottom. So what I do at this point, whenever I see a bounce like this, is I place a box from the lowest bodies of this first low to the lowest low of this first low. That is what I call my termination point. What I want to see is the market retest this point. A candle can close inside of this area. A wick can go past this area. We could see nothing but the wick of a candle touch this area. All of that I would consider a valid double bottom. What I would not consider a valid double bottom is if we get a candle, but the wick doesn't touch my area. Or if we get a pullback and we see a candle that closes all the way below my zone, those two situations are no longer a valid double bottom for me. So those are my objective rules for a double bottom. We'll click play here and see what the market does. As you can see, we've now entered into my termination zone. We have not closed below it. Therefore, we have a valid double bottom so far. Still, is this valid? Yes. No candles closed below my zone. Therefore, I'm still considering this a valid double bottom. The next thing I need to see is a break of this neckline. Once I see that, like we do right there, I'm then waiting for this market to pull back to that neckline to place my possible entry. Once we do that and pull back to the neckline, I want to see buying pressure. For me, buying pressure is nothing more than a green candle. Once I see buying pressure, I'm just explaining to you exactly how I trade these double bottoms, or exactly how a lot of people trade them. I trade them slightly differently, but for the purpose of this video, this is what we're going to talk about. So I would place an entry there. We have a 17 pip ATR right now. So 17 plus 30 is 47. 47 pips, and I want to target my next level of resistance, which is right up here in this area. So at this point, we have our trade set up. We've had buying pressure after a double bottom has been confirmed by the breakout and a pullback to the neckline plus buying pressure. Okay, cool. We're in the trade. Let's see what happens. Eventually pushing up, down, up, down. This is the reality of trading, guys. You will be tortured emotionally during situations like this, but it's just what happens sometimes while we're trading. And there we go, finally hitting targets. You have to have emotional fortitude. That's something, unfortunately, we're not going to have time to discuss in this video because it is going to be well over an hour long. I already know that. But that is how I would trade the double bottom. The double top would be the exact opposite of that. We'll go over that really quickly. You should have a pretty good idea by now. But here on the double top, the only difference is I am putting a box. Let's actually, does it sound like I'm saying pudding? It does to me. Let's put a box right there. So now what I'm waiting for a double top is the market to push up into an area of resistance and have a pullback. Once I have that pullback, I'm placing a box from the highest bodies of the first top to the highest wick of the first top. This is what I call my termination zone. I want to see a candle that at least touches that zone. But what I cannot see is a candle that closes above this zone. A candle can close inside of the zone. A wick can go past the zone. The only thing I cannot see is either a candle not touching it at all or a candle closing above it. So with that said, click play. You already know what this turns out like. Yes, we have a valid double top, and yes, we broke the neckline. The way I would trade this is by waiting on selling pressure at the neckline as the market pulls back up. Clicking play yet again. Selling pressure would be this red candle. Stop loss at that point would only need to go above our swing high, and then we could target whatever we needed to, pushing lower. And that, my friends, is how I use the double top and double bottom strategy. So now you have to work best whenever you're aligning yourself with higher time frame trends. So let's say you're trading these patterns on an hourly chart. If you're trading a double bottom on the hourly chart, and what I mean by that is you actually see the double bottom itself on an hourly chart, you want to make sure that the daily chart is in an uptrend. So that way you are aligned with the daily chart uptrend while trading a double bottom on a 1 hour chart. The opposite is true for a downtrend and a double top. If you're trading a double top on, let's say, the 1 hour chart, you want to make sure that you are aligned with the daily chart trend. You want to make sure the daily chart is actually in a downtrend while you're trading that double top on a lower time frame. This is going to add an amazing amount of accuracy to your double top and double bottom trades. It'll also add accuracy to any other chart patterns that you decide you want to add to your trading arsenal.